Recording, and we're off to the races. Well, I hope everyone's doing well. I had to send out that reminder again. Doesn't seem like going to Google helped at all. It seems like still having a problem with emails getting through. It's a bit of a bummer. So back to the drawing board, I guess. So anywho, coming through here and looking at everything that's happened in the market in the last 24 hours or so, it's actually been a pretty profitable last couple of days, last 24 hours anyway. One of them that kind of got me was on this dollar Swiss. You can see the dollar Swiss came down. We had gotten it off the 78.6% retracement. I actually got stopped out by like 2 pips before it ran on me. However, I was able to kind of stop the bleeding on that one based on my plays yesterday on the pound dollar and the dollar yen. Pound dollar, we were waiting for it to break down below that longer term trend line, which is right in through here. There we go. It did break down below that trend line. It made a strong close below it. You had to like the news that caused it also, with the exit polls showing the outs in the lead as far as the Brexit goes. So one thing we keep on talking about with the pound is the fear involved in it, and there certainly is quite a lot of fear driving the pound. You know, the old saying, when there's blood in the streets, buy real estate. That's kind of one of the things here is when you know fear is driving an underlying currency value. So I went ahead and shorted it. I put a stop 50 pips away. Put my limit at 75 pips away because I felt more volatility could occur, and I was able to hit that pretty fast there yesterday. So lost 20 pips on dollar Swiss, but gained 75 back on the pound. Dollar yen also, I went ahead and took the short on dollar yen that we had yesterday. What we were looking for on dollar yen was just for it to close beneath that 111 level, which it did right in through here. I put my stop right up above this high, which was roughly about 50 pips also. I put my limit on that one also 75 pips away. I like the news bringing the yen down too, because right when that Brexit poll came out, markets started selling off, yen started selling off, and was able to hit. So I lost 20 pips on dollar Swiss, but I hit 75 on pound, 75 on the dollar yen, and so all has become right with the world here. So there's no need to really change much around here on our strategies. I still have quite a few things that I think could trigger here today. We're not going to leave the pound alone at all. We're still going to stay aggressive on it as far as strategies for today. Global markets are still down across the board. It is June 1st. Oil is down off of supply concerns coming out of OPEC, so oil's down today. That Brexit is kind of leading the news. There are some scheduled news out today, but the big thing leading the news announcements today in the Forex market is that Brexit, that probability scenario with the outs that led the polls yesterday. It didn't take long for the pound to get pounded, and we can expect more pound weakness, I believe, in the next in the coming month, if you will. So strategy for today, pound dollar, we're still going to trade aggressively. We're still going to sell it on momentum and retracements. Still looking to trade dollar strength or weakness on other pairs. You know, there's a couple of opportunities we can look for there. If you would have gone half and half on the dollar Swiss and New Zealand yesterday, you obviously would have been stopped out on those also. So, you know, had a little bit of a hiccup on those pairs, but overall you can see the dollar's been weaker across the board, and the pound, except for versus the pound. Obviously the pound's been driving a lot of weakness, and it's been weak versus commodities, currencies, New Zealand, Aussie, and sideways versus CAD with the kind of the motions that oil's been going through. But there are several opportunities here that we can look for. So we're going to start here with the pound dollar, what to look out for today. It's always nice whenever whenever you're in a position to where you have where you've already captured some profit, because you can be a little bit more patient. You can see that we had the big drop down in the pound. We've had some consolidation right in through here, and then we're starting to get a little bit more of a negative downturn on the pound right in through here. So when we talk about momentum and retracements, all we need to do is really zoom in on this chart, and it gives us, both scenarios essentially. So looking for first momentum plays, since I already took 75 pips off of this, it's very tempting to want to sell it now, which I don't think would be a bad trade at all, selling it now. I think that this pound weakness is going to continue. I think everybody and their twin brother are kind of bearish on the pound right now because of the news coming out of there. However, we should probably exercise a little bit of patience on it and wait for it to break down below this 4,400 level. And when I say break down below the 4,400 level, possibly even just a break of the 4,400 level would be cause to want to go short. Meaning if it just not necessarily waiting for a close, but looking for a break below that 4,400 might be a good idea. So I'm going to put on here, as far as a sell entry, break of 4,400. If you're looking at PitView, if it's -5 on the 1 hour totals, it's been there's a lot of selling pressure backing it. If you want to be a little bit more conservative, you can wait for it to close at the 10 a.m. hour. But certainly if I see this start to bounce and go down below that 4,400, I think that we could certainly have a trade in store for us, and just keep looking for putting the stop 1 pip above swing high. I'll probably do a 50 max. And then look for a limit, once again, of 1 to 1.5 risk reward. This is the time to take opportunities that have larger risk reward ratios. If you even wanted to try out a 1 to 2 risk reward, I think that you could possibly get that. As long as you manage your risk effectively and keep trailing your stop down, I think that's actually plausible of being able to capture maybe even up to a 1 to 2. Especially if you're doing like a limit 1, limit 2 scenario, if you can take some profits off at a limit, if you wanted to try out a limit of 1 to 2 risk reward, if you can do limit 1 at 1 to 1, you could also look to get a limit 2 at 1 to 2 risk reward. I mean, whenever fear is driving the markets, we saw this at the beginning of the year. Whenever fear drives the markets, fear causes volatility. And so volatility, that can lead to further, downward momentum, if you will. I'm not real worried about, I know that there's previous support levels and previous resistance levels in there, but it's just like the markets. Whenever fear is driving the markets, I'm going to look for it to break through this key level, and it's already broken through the longer term trend line, and we got to take our memory and kind of erase it a little bit when it comes to kind of past support and resistance levels, because of the fact that when you look at things in this regard of fear, it's very easy for things to pop through. If you're trading volatility, which is what, if you look for a higher risk reward ratio here, you are trading volatility. You're expecting higher volatile moves to the downside on the pound. So, with that being said, if you're expecting volatility to come into play, then, it kind of, you can, whatever you look at, like the ATR, the average ranges, you can kind of throw those out the window. Even, to an extent, even, support and resistance levels. Generally, whenever there's huge fear sell-offs in the market, things do not have a problem breaking down and breaking through those longer term support and resistance levels. And we wouldn't even talk about, we wouldn't even be talking about, these higher, getting greedy and looking for those higher risk reward ratios if we're not for the kind of the fear factor, if you will, driving the pound down. So for pound retracements, file this under dollar strength. So for pound momentum, I should say, sell into a break of the 4,400 level. And then today, the retracement scenario on the pound is actually very simple. Take some of these objects off the list here. There, I'll just take all of them off. So from a retracement standpoint, swing high, swing low. Here's our swing high. We're expecting this not to make any lower highs, if you will. Or I'm sorry, higher highs, since it's in a downtrend. If it comes up and retraces here, see that level? That level is really a nice little 78.6 level. So if we get any type of touch and close off that 78.6 level, if you're using PitView and you see that thing start to go negative as it's hitting the 78.6, take it. You can put your stop right up above the swing high, which would be 1.45092. And then once again, I'll put a limit on here of 1 to 1.5. But if you're doing limit 1, limit 2, I think you can look for higher amounts. I think you can look for a higher amount of risk reward. Limit 1, limit 2 would put you at limit and actually look to make more off those moves. It's nice to be able to take those profits off overnight because, when I say aggressively sell it on the break, we can, if you took profits off on this yesterday, then there's nothing wrong with, being more patient. I don't want to drive you into being more aggressive than you have to be. But, in these types of scenarios, sometimes it's not a bad thing to be a little bit more aggressive. When we see trends starting, especially when we see, trends, prevailing trends in the market, or we see things starting to turn. You can kind of see it on here when we go to the daily chart. Zoom out a little bit. Kind of see on this daily chart, when you kind of zoom out, you see right in through here, it had made that inverted head and shoulders right down in here. And now you see that it's making, the semblance of what we would see as a double top formation, but it's already breaking through these longer term trend lines. Here, let me take these objects off the list real quick. There we go. Longer term trend lines right in through here. It's already kind of broken down on the daily charts. We do have this little area right in through here, which would be a break of a longer term reversal pattern, showing perhaps a potential for this to slip down. I think that before the Brexit comes out, I think that the pound, could come down and at least test these lows right in through here at the 142, 140 level, based on the big moves we've gotten today and yesterday in the last 24 hours or so. So definitely want to be prudent on it, but, would it be prudently aggressive? This would be the term on it, I guess. All right. So looking through some of these other scenarios, you can see the dollar yen made a huge bounce down. Between yesterday and today, we're looking at 230 pips or so of movement to the downside on the yen. So proving, selling it up in here on that break below the 111 level, that was a pretty fine idea on our part of getting in on that move. Now it's down to kind of the lower part of its range. You can see how much this dip has gone down, and it's sitting here right at that 109 level. It's another one that you like kind of looking at the daily charts, because it's kind of on the daily charts you can see clearly that it's broken through any type of longer term trend line or whatnot here on the yen as it's gotten down towards that 109 level. Very interesting. There still is, when you look at this, there's still opportunities, I think, even though the yen has made, huge moves to the downside based on the fact the market's been kind of selling off like crazy. This is another one to where you could be, kind of aggressive here. You can see how the yen has come down almost right to this 109 level. And the question would be, is it done? Is it done going down? You can kind of see on that daily chart, it's made a huge move to the downside here. But is it finished? Kind of see these lows bouncing right in through here. The news all kind of matches up with some pretty bearish market conditions here. All the futures are indicated down here in the U.S. You've got a large amount of selling pressure in Asia. You had Europe was down slightly here this morning. So you have a lot of things that are kind of working out in your favor of a stronger yen as we've kind of approached a little bit of a sell-off, or we've gone through a little bit of sell-off here in the markets. So on the yen here, I'd want to, if I were you, I'd want to play this one a little close to the chest, but this would be more of a dollar weakness opportunity. If it can close below that 109 level, I think that we can look for, further amounts of further downward momentum, especially if the U.S. market starts selling off this morning. You see it's trying to make a bounce here off 109. The stop, look at all that red right in there through there. The stop, whatever this swing high happens to be, if it closes below, I kind of would look at this one as more of a short-term trade scenario. Whatever that high happens to be on that candle, I would just treat it as a swing high and maybe look for a little bit of short-term bearishness on that yen. So you can see, putting it above the swing high, or, whatever it happens to be above that swing high, it's right now it's at 118. So you'd be looking at maybe a 20, 25 pip stop. Depends on where it would close below that 109 level. So I'm keeping this one a little bit more close to the chest just because I know it's made such an extended move to the downside. However, since volatility's gone up a bit here, you got the Dow futures are down like 84. You got a lot of selling pressure hitting the market here. I think if we get another big downturn in the market, that this is another one that can make more extended moves to the downside here on dollar yen. The thing that we had working for us yesterday is that we were essentially short. You know, at one point I was short on pound yen. You know, we were short on the yen when it broke below 111. We were short on the pound when it broke down below that trend line. You know, when you look at the volatility that hit here between these two, would have went 3 for 3 yesterday because the dollar spiked up versus the Swiss. Man, because the European currencies all sold off at that point when those Brexit concerns came out. But almost went 3 for 3 yesterday. However, back to the point at hand, you know, pound dollar shooting down as much as it did, you know, 300 points. You got the dollar yen shooting down about 200 points since the close yesterday, since where their highs were. So what do you think the pound yen went down? Yeah, it should be about 500 points or over 500 points. And you can see 163 to 157. So about almost 600 points there of movement on the pound yen to the downside. We were essentially short this pair. We were short the pound dollar. We were short the dollar yen. We didn't capture that entire 600 pip move, but yes, I am snipping these. Should already have dollar yen snipped. Yes. So here we are, dollar weakness. I already have both the pound trades on there. To dollar yen, sell into break of 109 level. So I brought up that pound yen just to show you with the dollar yen going straight down and the pound dollar going straight down. You can see pound yen went straight down. I only bring that up because somebody had asked me about shorting pound yen. It was in the evening hours last night, and I replied. I said, "Hey, I'm already short dollar yen. I'm short the pound. I am already short the pound yen. Essentially, you know, that's what happens when you do two pairs. You know, we think about doing two pairs. You're already short on that cross pair. You know, that you can call it a synthetic or you can call it whatever you want, but you know, it's just the way the market works. You know, pound dollar times dollar yen is going to equal out to pound yen. So we're already short on that pair. The good thing about doing two pairs is the fact that it gives you kind of a better shot at potentially being at least profitable on one side of the trade. From a retracement standpoint here on the yen, I wouldn't expect too much as far as bullish market conditions today. I think there's a lot of wait and see going on. There's OPEC meetings going on, automobile sales coming out. I mean, there's a lot of things coming out, and the Brexit being kind of the leader of the speculation today. So I think, you know, being bearish on the pound and being bearish on the stock market is not a bad thing. You know, if we could, you know, especially if we get a dead cat bounce from some of the selling that we've had over the last couple of days. So looking here in the direction of the dollar yen, I think we can treat the dollar yen almost the same way. We're essentially treating this one with momentum and retracements also. I don't know why, but I really like this strategy of both the pound and the dollar yen, of kind of aggressively trading them both into any type of momentum and retracements that they have today. 10.193. Limit 1 to 1.5 risk reward. Or limit 1, limit 2. So selling that dollar yen into retracements. It's all about the Brexit. We could almost write a book based on how long a lot of you have been with me. We can call it From Grexit to Brexit. From Grexit to Brexit, the story of a Forex class. All right, let me get into some other from some of the other ones that look kind of promising here. There's one that I was looking at from this morning because it was showing a nice little ABC here on the euro. See, the euro after it's sold off is still kind of making lower. You know, I got the PitView indicators on here because it was starting to kind of make a as it was coming up, it was still making a little bit of a divergence. I'm not too worried about the PitView indicator on this one, but I do like the formation from that swing high on this euro dollar, and I like the level. You know, I like the level on a lot of these trades, the levels in which a lot of these are kind of popping up off of. And I think if we get a short on the euro, I think we may not get a short on the pound. You never know. The dollar could drive the market. But I want to throw this in there as a dollar strength opportunity just because I want to have something in there when it comes to this Brexit scenario that includes the euro. And the reason why is because we've had this conversation before is which currency is the Brexit worse for? You know, is it worse for the pound or is it worse for the euro? That's kind of a great question to ask. Is that, you know, which, you know, we've seen this kind of this divergence, and we've seen this divergence today also, and I'll get into that here in just a second. Let me just write this out. Single bar touch and close off the 78.6. This would be another one where you could put your stop at a nice area above the swing high. So stop 1.12187. And that is a bearish Gartley pattern, by the way. If you look at it from that swing high, I mean, it's kind of meets the parameters for a bearish Gartley. Because you got an A retraced back to 61.8, B retraces between 38.2 and 88.6 of A, and you got a C coming up in here and hasn't quite touched that 11.903 level, but it's been extremely close. So we'll put that one up here above for dollar strength also. Let me just bring this up real quick. So when you look, kind of compare the euro versus the pound. Now this correlation that we kind of found last week, it's not 100%, so it hasn't been happening 100% of the time, but it's awfully close, because, you know, look at the euro up in here, and you can see what's the pound doing. The pound's going down. What has the euro been doing? It's been going up. So the euro's been getting stronger, the pound's been getting weaker. So I think in this case, you know, you did see this come down. You know, when you match up the days, you know, they have correlated, you know, in the same direction with one another. But once this drop started, right in through here, like when this drop started, we had this going on. And then when the big drop, this is the big drop yesterday on the euro and the pound, they correlated once again to where, you know, they went, you know, euro dollar went down, pound dollar went down. And then just from the opening of the European session, you see that there's that divergence again. You got the euro going up and the pound going down. We've talked about it a little bit of the fact that, and no, this correlation has not hit 100% yet. So this is not something that we can count on happening 100% of the time, but you are getting that slight divergence between the pound and the euro right in through here, that kind of inverse correlation where the euro's getting stronger and the pound's getting weaker. You even get it here on the Swiss, where you got the Swiss getting stronger, you got the pound getting weaker. So my point being that if we get a trade that can execute on that euro dollar, if it can come up and make a retracement, we get a sell on the euro dollar, we may not have any type of trade be occurring on the pound at the same time, because if the euro goes up to that retracement level, well, I guess we could, you know, we could get, you know, based on where the euro's at right now, it would have to go up another 30 pips or so. We could find ourselves in a situation where we're short pound and short euro at the same time, I guess. But I still like that retracement. I think between those two trades, you would have an opportunity to where at least one of them would have a good probability of reaching max profit, I guess is my point. And if we keep on using those higher risk-reward ratios, then, you know, when we get those higher profitability levels, you know, that just makes it all the better for us, because it can erase a lot of the risk and the losses that we have on some of the other trades that we have. So that's the ones that are kind of scaring me right now that I don't really want to touch are right over here on the commodity side. Another loser that we had yesterday was on the New Zealand, to where it just kept on climbing. So, you know, commodity currencies have actually been quite strong as far as the Aussie and New Zealand. We did have some strength on the Canadian. However, it's now kind of come up here above the 3,100 level. What's it doing right now? We had started looking at this. We had a nice little ABC on this one also that hit yesterday. I failed to mention that one, where that one came down. I know a lot of you ask about Canadian, so I always feel a little bit of a need to talk about Canadian a little bit. And then it formed like a little ABC coming down here too, and then came back to the upside. And now it's retracing back to the upside here. See, it's almost at the 78.6 level. With how strong, I know that there's been some concerns with, and oil prices have been highly volatile. And I know a lot of you ask me all the time about, you know, plays on the Canadian. You know, it's already making a nice little retracement in here. I'm not going to put this one on the trading sheet, but, you know, if you look at this one, I think that the best thing you could do on dollar Canadian right now is, now that it's retracing to the upside, is I would look for it to break and close below that 3,100 level. And I would look to be more of a seller, because I think the dollar might be the driver of the market today. So the dollar's either going to get strong or it's going to get weak. So, we need to, that's why on the dollar yen, we have the two scenarios for selling the dollar versus the yen based on underlying market volatility, which right now is down. Looks like we have the Nasdaq's down about, let's see, 22 points. The Dow's down 117. I'd look more towards this Canadian on the sell side of the equation. I don't really kind of see here, it's making kind of an inverted head and shoulders, or I'm sorry, a head and shoulders top right in through here. It's got a left shoulder, right shoulder, and you got kind of a neckline coming in through here, right in through here. But I still do like dollar CAD more to the sell side of the equation right now, as it's made this little retracement. Still in the upper ranges of 40, the upper 40s as far as oil prices go. And let me check the news real quick. Where are we at from a news standpoint? I know we had some manufacturing numbers coming out today. I know the pound news was actually pretty good. No real news on the CAD. Yeah, ISM manufacturing coming up here at 10 o'clock. Purchasing manager index. That you could see a little bit of a move on the dollar on the ISM manufacturing, so you might want to wait until after 10 o'clock to put any trades in. I don't think it's going to create any type of longer term trend in the market, but yeah, you might want to keep an eye on that ISM manufacturing coming out for the US dollar. That one's been kind of all over the map when it comes to the underlying volatility of the news. It hasn't been like non-farm payroll or anything, which is also coming up on Friday, to where it's moved like 50, 60 pips. But sometimes you'll get like a 20, 25 pip move or so off the ISM number. New Zealand and Aussie both have big news. You have the GDT price index, their dairy prices. You got the retail sales coming out for Aussie. Tomorrow, we're not going to trade it just because I think everybody's kind of built in everything into it. But tomorrow coming up, we have the European Central Bank, their interest rate announcement. I don't expect anything to change there. We'll normally trade the ECB announcement. I don't think it's necessary tomorrow. I'd rather wait until after it's all done before making any decisions on the euro. I think people are expecting more, dovishness, or you could get some surprise hawkishness. You never know, coming from Draghi. Kind of that ship has kind of passed us as far as any surprises might go. I don't think they're going to be adding anything to their QE or making any special announcements. And then tomorrow morning might be pretty busy. Like, and when we start clash, we're going to have Mark Carney speaking. So there's a lot of news coming out tomorrow that we'll want to be keeping an eye out on. And in our 9 o'clock class tomorrow morning, we'll certainly have a pretty clear picture of what's shaking out with the underlying markets today. Other than ISM manufacturing, I wouldn't touch New Zealand or Aussie because of these two numbers. But as far as the trades that we're looking at, not a huge amount that we really have to concern ourselves with as far as scheduled news until tomorrow morning. So dollar CAD, I kind of would recognize that one as being more of a short opportunity. So we're not really close on anything yet as far as any of our trades go. But that's how I'm going to keep it. I like being pretty aggressive on dollar yen and pound dollar, just because those have been two of the biggest movers. The thing that we should feel comfortable about, as long as we kind of look for those higher risk reward ratios, kind of like yesterday, it didn't really affect me at all being stopped out on that dollar Swiss, just because I was able to turn around and be short on pound and be short on the yen. And because we use that higher risk reward, You know, even though we lost one and we won 2 trades and lost 1 trade, we end up being profitable by a pretty huge amount. So I'll go ahead and save the worksheet for today. That's where I'm going to leave things. Oh, excuse me. A little sneeze there. Alrighty. So let me go ahead and upload this. There we go. Stick with the plan. The plan is sound. And we'll obviously reconvene tomorrow morning, see what's shaking out, but let's stay relatively aggressive here, and I think that's our best bet. I know I got some emails to return and send out here after being on vacation the entire weekend. We'll be working on that here today. So if I don't talk to you later, I shall see you tomorrow morning. So remember, momentum and retracements on the pound and momentum and retracements on the yen, and I think that should keep us pretty good, and that's a nice little setup to go short on euro also. So among those trade opportunities, I think that we have a good shot at least, you know, of being net positive or net profitable on our opportunities for the day. So I'll chat to everybody tomorrow morning. Thank you for coming in, and I will see you later. Bye-bye.